Hey everyone, welcome to episode number 2 of the Wealth Transfer Series. We're going to talk about the coming $100 trillion market. I'm going to show you the 6 markets that crypto is disrupting. I'm going to show you how much wealth is going to be transferred from those markets. I'm going to show you exactly how to navigate those changing markets, and most importantly at the end, I'm going to give you the 5 best sectors for you to be invested into right now. So stay tuned. Hey everyone, welcome back. We are in episode 2 of 4 of this wealth transfer series, and today we're going to be talking about the next $100 trillion market. Yeah, that's a big number, 100 trillion. We're going to talk about that. I'm going to show you exactly how it's going to get there, where the value, where the wealth is going to come from. Before we do, just a real quick recap. The first installment of this 4-part series was the last video last week. We covered how to build wealth that lasts generations, not just your lifetime, your kids, but even for your grandkids. Now, we talked about how the bad news was that building real wealth like this requires luck and timing. So that's the bad news. The good news is that you are lucky because you're in the right place at the right time, and there's this massive wealth transfer happening. Now, we also learned that money is like energy. What that means is, just like energy, it doesn't disappear, but it transfers. So that means when one group or one person loses their money, it transfers to another group. So we talked about how that works and how you can be on the receiving end of that wealth transfer. The other thing we talked about was how there's basically been 5 new technology cycles over the last 200 years, and how each one of those technology cycles has created massive wealth for a different group of people in every one of those. We also talked about how understanding how these technical cycles work, how if you can understand them, then it's the key. That the key to investing, the key to making money investing through these technology cycles is to figure out that process. And then at the end of the video, I gave you a link where you could actually download a guide where the name of the guide is How to Navigate Technology Cycles to Build Wealth. And we actually look at the last technology cycle, the internet. We kind of broke it down, showed you the different phases and how you would have changed your investments through that. So that's a real quick recap. Go back to that first video and watch it if you haven't already. Now, getting right into this one, I want to talk about how each technology cycle creates more wealth. So we talked about how these technology cycles create massive wealth. We talked about how each new technology cycle creates massive wealth for a new group of people. So the people that got rich in the railroad technology cycle were not the same group of people that got rich in the automobile industry. We're not the same group of people that got rich in the internet industry, and will not be the same group getting rich in the blockchain space. So we talked about that. But what we didn't talk about is each new technology creates more value than the one previous. So we did give a couple illustrations how, like in the railway technology cycle, the Vanderbilt family had built about $150 million worth of wealth, which today doesn't sound like a lot of money, but back then in the 1700s, it was massive. So about 150 billion. Then the automobile boom, we had Henry Ford amassed about 200, and then going into the internet boom, for contrast with Jeff Bezos, I mean he's $80 billion, or maybe even more, maybe close to becoming a $1 trillion person. So you can see that each technology cycle creates more value, or I should say creates more wealth. The reason why it creates more wealth is because it creates more value. So you guys have to understand that, right? Value creation is what gives you money, what gives you wealth. So the more value that you can provide to the world, the more wealth that you'll receive. And the technology cycle is exactly the same, where the more value that the technology can provide to the world, the more money or wealth will be created. So for example, back to the automobile industry, the automobile industry, the automobile created massive value, right? We used to have to walk or ride a horseback, which was very slow, and then we had an automobile, so we could move much faster. So that created a lot of value. Then Henry Ford was able to create a low-cost car through a assembly line. He kind of invented that assembly line, which created massive value for lots of people. That's why he made a lot of money. So the automobile got us away from walking, from driving on horses, and so it created a lot of value. So there was a lot of wealth created there. But if you look at the internet created way more value. The internet connects people. It allows us to share information, upload and download information. And really, if you think about it, it took value away from the transportation industry. So we used to have to drive to a meeting. We used to have to fly to a meeting. Today, with the internet, we don't need to travel. Today, with the internet, now I can be in the office, we can do this video like we're doing right now. So it took value that was in the previous technology cycle and brought it forward to this new technology cycle. So the internet, as a technology, allows us to share information. I can upload a file, you can download a file. I'm uploading a video, you're going to download the video, etc. And that creates massive value for everybody. And again, with Jeff Bezos being an example, he's almost $1 trillion man, right? So that's how much value is being created. Now we have a new technology cycle starting with cryptocurrency, crypto assets, blockchain technology, and it's going to create even more value. So the internet allows us to upload and download information. We can share information, and information is valuable, don't get me wrong. Everything requires a third-party central administrator. So for example, I'm uploading to YouTube. You'll be downloading this video from YouTube. I can upload a file to Facebook. You can download my photo from Facebook, etc. Right? So there's always a third-party central administrator involved. What the blockchain cryptocurrency cryptocurrency technology does is it allows us to share things of real value, not just information, but things of real value. I'm talking about intellectual property, smart contracts, land title records, and money. And it allows us to do all of this peer-to-peer, person-to-person, without getting a third party involved. Every time there's a third party involved, I have to send to PayPal, it goes to my bank, and then it goes to your bank, and then it goes to you. Each one of those people in the middle take a fee. We call them rent seekers. They're each taking a piece of the transaction. They're slowing that down. They're creating friction in that transaction. And by removing all of them and allowing us to communicate and transfer value peer to peer, there's more value left over. And really, for the first time in human history, we have a way now to transfer or pass value peer-to-peer without using a third party over space and time. So over a long distance, right? I don't know you, you don't know me. It's not like we're handing cash back and forth. We're actually passing value over space, over time, and it's just creating so much more value than what the internet did. And so if the internet has created trillionaires, the blockchain crypto space will create multi-trillionaires, and not just for the very top, but everybody else along the line. Now, to see how we get to this massive value creation, to how we get to that $100 trillion number I threw out, which I know sounds really big, and it is, because we're at about 200 billion today. Now, at the end of last year, we kind of almost were looking at towards 1 trillion, but how we're going to get to 100 trillion, I kind of broke it down a little bit right here. So just in new and emerging markets, so these are places that are not developed like the West, so not Europe, not the United States, etc. Right? So a lot of people might refer this to the BRICS nations, which is Brazil, Russia, India, etc. Right? So anyway, these are emerging markets, but a lot of places like in Africa, for example, they don't have access to banks. And so as of the last year, I believe the number is 2 billion adults in the world, 2 billion adults in the world that have no access to banks, no access at all. So with Bitcoin, for example, Bitcoin is going to reach everybody in the world, including the 2 billion people that have no access to banks. And what's happening in these emerging markets, in these developed markets, is they're skipping right past the bank, right into crypto. And we've seen this happen before with mobile phones. So because these areas of the world are so remote, they don't have existing infrastructure and services like in developed nations. So for example, they don't have telephone lines. So most everybody like in the United States or Europe had a landline phone before they were able to get a mobile phone. But what we saw in these emerging markets is they never had a landline phone. There was never any wires ran, so they skipped landline phones and went straight to mobile phones. And the reason why that's extra important is because all you need is a mobile phone to have Bitcoin, to have crypto, to transfer crypto from person to person. All you need is a phone. So these emerging markets already have the phones. They don't have banks. They're skipping over banks and going straight to crypto. So that's about a $12 trillion market just in itself. Just these emerging markets, there's $12 trillion ready to move into crypto because they don't have access to banks. The next big group is the institutional investors. I've been talking about it for over a year. They're coming, they're coming, they're coming. There's lots of things that are preventing them from coming in. Rules and regulations aren't in place for them to do that. We've talked about for a year we need institutional custody solutions, and we have several of them coming online right now. A couple really big ones will be online before the end of 2018, and so this is really starting to happen. And now, I talked about a year ago how really the big piece to fall, the big domino to fall would be pension funds and endowment funds coming in. And I said once one of them tips their toe in the water, they'll all start coming in. And so we got the first toe in the water, and the rest is about to come in. 2019 should be a really big year into 2020. And that's $70 trillion just in pension funds and endowment funds. So there's $70 trillion. Now, I'm not saying all 70 is going to come in right away, but a piece of it comes in over time. A big majority of that's going to come, and I'm going to get into that a little bit later. Now, there's new asset classes. So basically in Wall Street, they create all kinds of financial instruments, a big one being like ETFs, for example. We've talked about ETFs coming to Bitcoin for quite some time. I believe we'll see them probably in the first quarter of 2019. For sure, in 2019, we'll see ETFs. And the ETF market is about 20% of the total stock market. It's about $10 trillion just in that alone. Again, we'll have ETFs coming. Doesn't mean 10 trillion is coming overnight, but it will come. This is a massive wealth transfer, a massive shift over time. 10 trillion there. Digital gold. So the gold market, most people buy gold as a store of value. I believe that my currency is inflating. I'm losing my money by saving it. It's inflating away. So I'm going to put money into gold. The gold market is about $7 to $8 trillion. The reason why people own gold is to protect themselves from their fiat currencies. And that's about the same reason why people hold Bitcoin or believe that Bitcoin will be that store of value, is to get out of their fiat currency, like we're seeing today in Venezuela and Zimbabwe and Turkey, get out of their local fiat currency and go to Bitcoin as a store of value. So it's pretty easy to see how if Bitcoin can really establish itself as digital gold, as a good store of value, how that $8 trillion market can flow right in. A big piece of it anyway. Now, the next big piece, and this is a really big piece, is really tokenizing the world. I believe, not just me, most experts believe that most assets or almost all assets will eventually be tokenized. So real estate will be tokenized. Collectibles, fine art, things like that will be tokenized. Stocks will be tokenized. Bonds, fiat currencies, everything will be tokenized because it's the best way to hold it. Right? It's the best way to make sure you have ownership, to retain control, and not have to have these third parties sitting in between you and your assets. So that market alone is $700 trillion. If you add all that up, we're almost at like a quadrillion dollars. So to get 10% of that to 100 trillion isn't really that far-fetched when you kind of break it down that way. Again, not overnight, but over time we'll see that. Now, money, currency, and investments make up a huge, huge piece of the world. And I want to just kind of break this down just a little bit. Now, these are deep subjects, and I try to make them as simple as I can for you. So hopefully you like this. Give me some likes on this, please. You know I do this just for you guys. So give me likes on this. Make sure you're subscribed if you're not already. And then, you can really help me out by sharing this information. So if you could just share this video, that'd be great. So give me some likes. Also, these are deep subjects. And so if you have questions about this, leave a comment. You guys know that I answer every single comment on the videos. And what I'd like for you to do is if you hear a piece that you'd like me to dig in more, you'd really like me to explain, in the comment, just put the timestamp. So put 2 minutes, 53 seconds or whatever. And then leave that so I can dig in deeper and I can give you more information right there. So give me likes, give me comments on what you want to know more. Now, back to this. So just to break down one of these sections a little bit, the global money supply, just the money supply, like the fiat currencies, is about $80 trillion globally, 80 trillion. And I think that number is low. And here's why. The reason why that number is low is because a lot of people don't leave their savings in cash, in money. The reason why is because it doesn't pay anything. We have inflation. So inflation is prices are going up, right? It costs more to buy groceries or buy a house or buy a car. So we have this rate of inflation. Things are going up. And if my money is in the bank and I'm not earning interest, then I'm actually losing money, because as prices go up, my money doesn't keep up with it. So what happens is most people don't save. It's not a good place to do that. So what they do is it forces everyone to become investors. Now all of a sudden, just for people to survive or to get ahead, they have to become an investor. That's why you guys are probably watching this video right now, knowing that you have to learn how to invest your money, how to make your money work hard, etc. The problem is that the reason why it's important to have a store of value, if you really go back to the history of money and understand money, is that what having a hard, sound money does is it allows specialization. So it used to be I had to grow my own crops, I had to make my own clothes, I had to grow my own cattle, etc. But that in the barter days. But as we had this money, it allowed me to specialize in what I'm good at, which is growing crops, and it allowed you to specialize in what you're good at, making clothes, and it allowed us to specialize in treasure. But the problem is, because our money doesn't hold value over time, it's forcing us to become investors. And now I have to learn about stocks and bonds and treasuries, and I have to learn about cryptocurrencies or any of these things. And so because the money is not sound, it leads us to being forced into investments. If we had that sound money, I believe it would lead towards more savings. So right now, we have a huge amount of money in real estate, stocks, bonds. That's all there because the money needs to grow to keep up with inflation. So I think eventually we could see 90% of money coming over into this hard sound money, like into Bitcoin. Probably 75% of the precious metals market moving over into Bitcoin. 30% of real estate, stocks, bonds, etc., moving back into Bitcoin, back into a hard sound money. Because if I have a hard sound money, I'm not forced to become an investor. Now I can specialize in what I'm good at my business, etc. And so that's just digging into one of those points to show you how it's going to take money away from just one asset sector, just the money, currency, investment sector. Now, this is a big trend. This is a big shift, right? All of these 5 technology cycles we looked at, railways, steam engines, automobiles, they don't happen overnight. To go from the automobile to the point where we have 80% adoption takes a long time, right? Even the telephone, once the telephone introduced, took 80 years, or I'm sorry, about 70 years to reach 80% adoption. So these things take time. With the internet, you know, the first website went public, the first server went public in 1990. It really was about 2005 until like e-commerce and stuff really kind of started taking off. We had the iPhone in 2007, which is when we actually had internet on our phones. So that's about 17 years. And obviously it's still continuing to grow, but think about that, 15 years, 17 years. So it takes time for these to develop. Now, each cycle, on the last video, I put up a chart that shows how each cycle, the adoption period is shorter and shorter. So the move, the shift to cryptocurrency, to blockchain, to crypto assets is going to happen much faster than the internet boom, but it's still going to take time. And I think everybody right now is really expecting way too much, way too soon, and we have to be patient. So that's why I made that guide for you last time that shows those 4 phases so you can kind of know where we're at. Now, as these trends develop, as this technology cycle progresses, we're going to have smaller trends within the trends, right? So we discussed that, the 4 phases of technology cycles. I dissected in that guide, I dissected the internet cycle, and I kind of showed you how it fits into that 4-part cycle. And again, there was that free guide that really gives you more information. So go back and download that if you haven't. Now, just to kind of give you a glimpse in that, as a cycle progresses, we have to constantly adjust our investment thesis, right? So the types of assets that we made money in that last trend within the trend, maybe last year, are not going to be the same assets that we're going to have really good results with next year. Because as the cycle's progressing, things are changing, right? So to give you a really broad example, if you look at the internet as an example, in 95 to 97, really kind of the hot spot to be was like browsers and search engines and things like that, because that 95 was the first IPO, Netscape, which allowed us to browse and search websites. That was really important. Once we got into 97, 99, we started seeing platforms, right? That's when Amazon came out, things like that. Then in 2000 to 07, really we started seeing the websites, the e-commerce, the shopping, all of that come online. And then kind of from 08 to 18, it was really all about applications, right? So it was the Angry Birds, it was the Uber, the Airbnb, the applications. And so the sectors that you wanted to invest in were different. Now, of course, there's all kinds of stuff inside there. I'm not going to get into that. But as crypto expands, you're going to need to navigate this kind of like you had to navigate that past internet cycle. So, the reason why I'm teaching you all this is I want you to be able to navigate this on your own. I mean, you can, of course, always tune into my channel. Hopefully you're subscribed. If you're not, go ahead and subscribe right now. Click the bell to be alerted. But, I'll go ahead and keep you up to date on this, but I also want to teach you. So as we go through this, you can kind of figure that cycle out for yourself. So if you like me teaching you this so you can do it on your own, make sure to give me some likes. I need your thumbs up. And then again, leave me comments. Make sure to put the minute and the minute time stamp of the comment so I know exactly what part you like. I can dig in, answer that question more. Now, this is a deep subject. That's why it's broken into 4 parts. I can't talk about it all in this video because it just takes too long, but I want to make sure you have the information that you have. I try to keep these videos somewhat short so you don't get too bored of me. So I have a guide that goes along with this. Again, it's free, just like last week. I'm just giving this to you guys for massive value. And it's titled The $100 Trillion Boom. And it's the best sectors for you to be invested in today. All right, so I can't predict the future. I can't tell you exactly what sector is going to be the best next, at the end of next year in 2020, but I can tell you the best sectors that I'm looking at, that I'm investing in today. I'm going to show you how this technology boom grows to 100 trillion. So I'm really going to break down each of those sectors, and I'm going to explain to you how much value is in each one and really how that transfers over, so you can really understand that a lot better. I want to talk about the 6 legacy markets that crypto is going to take from, right? So those are the 6 legacy markets, what they are, how that value transfers over, that wealth transfers over. I want to show the 5 best trends to be invested in right now. So these are the 5 best sectors that I'm in right now, and you should be too. I'm going to show you the coin examples that are in each sector. Now, I'm not saying any of these coins are a buy right now. I'm giving you examples of which coins are in these sectors. And then I'm going to show you the exact steps that you should be taking today. All right, so hopefully you like that. Make sure you give me a thumbs up. Download the guide. The link is in the description below. Again, it's totally free. I'm just giving you guys that for massive value, so hopefully you like that. Next week, I'm going to be coming back with the 3rd installment of this, and we're going to really bring all this together on week 4 is going to be the final episode. So hopefully you're tuned in. Make sure you're subscribed to get the updates. And again, share this with your friends. I really appreciate that. And that's all I got for today. To your success. I'm out.